Two major central banks delivered interest rate decisions today. The ECB held steady at 2% and revised its growth and inflation projections upwards. That seems to perhaps rule out further cuts, maybe. And meanwhile, the BOE, Bank of England, cut a quarter. However, it was a very, very tightly done thing, 5-4. The governor was in the majority, barely. I spoke to Andrew Bailey earlier this month, and he said he was sceptical about rate cuts.
I will be looking very carefully at all the evidence that has come in since then when we start the round next week, because my view was, and we're now publishing each of our views, so you can see my view in there, was that it was premature at that point to reach a conclusion that we had enough news to confirm another step downwards. But I will come back to that when we start the round next week.
Which was it? Paul Donovan is with me, Chief Economist for UBS Global Wealth Management. What was it, do you think, of all the data that he saw since then that twisted his arm?
Well, I think if you look at the inflation numbers in particular, they are confirming that, that they were generally in line with the Bank of England's projections of further reductions in inflation as we go into next year. Service sector inflation a little bit lower than the Bank of England was projecting. Not massively, but, the trend is down.
What about the uptick in unemployment?
That, I think, we've got to treat with a bit more caution. So in the UK, unlike the Bureau of Labour Statistics in the States, the Office for National Statistics is being very honest and saying, look, you know what, we don't really trust these numbers. And so we've got a lot of complications on the unemployment side. I think it would be foolhardy to place too much emphasis on the uptick in unemployment because it's not a very reliable figure. And I think the Bank of England is taking that into account with its sort of softly approach next year. The signals are to be moderate in terms of any further rate cuts.
Right, so we've got the Fed, wait and see. The general consensus seems to be. The ECB, on today's statistics, not going to cut further and may even,
raising, I think, would be unlikely, fine. I have to say. I think, but steady as they go.
And the Bank of England's going to wait and see until it gets more data, which is, of course, what one would expect. But inflation in all cases, as I noticed that the US is sort of heading more towards trend and towards target than the others, but inflation's still up there.
Well, yes, the US is a bit of an outlier here. So Europe hasn't really had an inflation issue. The UK has had an inflation issue. Fair amount of that is government-controlled prices, which are now starting to come down. In the States, inflation's going back up. Today's number was, well, weird is the technical economics term. We had the biggest drop in housing inflation in almost 40 years. That's not real. You've got probably issues with inflation perceptions as well. People believe inflation is higher than it actually is because beef prices are through the roof, fish prices are through the roof, electricity prices are through the roof, all-time highs, never seen anything like it. That's what people are going to focus on.
So talking about this, never seen anything like it, if we look at what President Trump said last night, worst inflation 48 years, blah, 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 blah. If you look at it, what did you make of his defence of the economics?
Well, on some of the prices he cites, he's right. I mean, egg prices, which were pushed up by avian flu, are coming down again. Now, that's a supply shock, which has been corrected. It's nothing to do with supply and demand balances in the economy. But if you look at the broader range of prices, the pass-through of tariffs, which we're seeing it takes about 6 months for a tariff to work through, that is adding to inflation. It's hardly Weimar Germany. We're looking for inflation to tick up to probably 3.5%, something like that. It's not out of control, but it is going to be going up before it comes down reliably.
So I know you don't forecast the stock market per se, so do forecast the stock market for me, please. In a sense, what Mohammed calls the rational bubble, we could expect it to sort of deflate a bit next year, but the market still seems solid on these economic numbers.
Well, and that, I think, is reflecting the growth story, that we've got fairly solid growth coming through. So what's been happening this year is the middle-income consumer, very critical to the economy, they have been reducing their savings rate, putting away a little bit less each month, and doing that in order to afford the higher prices. So that's allowed the consumer to keep on going. European consumer doesn't have an inflation issue. In Asia, Japan's consumer is doing okay. So we're seeing sort of trend-like rates of growth emerging. And I think that will continue as long as we don't get a disaster in the US labour market. That's my main risk factor, would be a problem around the fear of unemployment in the States. That would be a potentially quite a nasty threat. But as long as we avoid that, I think we're okay.
We'll have a good year ahead.
Thank
Thank
you.
you very much indeed.